welcome to Investment Banking Insights. This is the only show dedicated to helping you learn both the technical and non-technical aspects of the investment banking process. Hi there, my name is Alex Mason and I am your host, a rising second year up here in Ithaca getting my Cornell MBA. And I want to talk to you today about the difference between expensing something and capitalizing it. So there's different types of costs that businesses have. And I want to go ahead and demonstrate for you on the whiteboard now when you need to capitalize a cost and when you need to expense it and what that means. So let's go ahead and take this to the whiteboard. Okay, so we know on our financial statements, we've got a couple of different ones. We've got our income statement, our cash flow statement, and our balance sheet. Now, when there's a type of expense that a business incurs, let's say that there's a lemonade stand and we're selling some lemonade. And what we're doing, let's say that we're purchasing something like sugar, and we're going to mix that sugar in with our lemons, or our lemon juice and water, and that's going to make us lemonade, right? So when we buy that sugar, where does that go in this landscape of the financial statements? Well, it's inventory, and so that's going to be used up relatively quickly. And so remember on our income statement, we have our revenue, and then we have our cost of goods sold, and then we have other operating expenses. And ultimately that gets us to operating profit, which after interest, after taxes, that's ultimately going to get us down to net income or the profit of our firm. So the thing is, if we're buying sugar, it's actually going to be considered part of cost of goods sold. When we buy this sugar, it's part of the product that we're selling, and we're going to use it up in a short period of time. So in general, if you're going to use up something as an expense, it's going to be expensed on the income statement. So if it's being used up, let's say within a year, it's going to be used up here. Now, let's say that I also need other things in this lemonade business. Let's say I need to purchase a lemonade stand, like a big wooden shed or something like that, that I'm going to expect to last me a long time. And it's just going to be a long-term asset in my business. So that's a little bit different. Because I'm using that over a long period of time, it has a longer useful life than 1 year, right? And it's actually not going into the product that I'm selling. It's just helping facilitate the product that I'm selling. I'm going to sit there. I'm going to put the glasses of lemonade on top of the stand while I'm selling it to customers. So this is a little bit different. This is capitalized. So on the balance sheet, you have your assets, you have liabilities, and you have your equity. So this would go under PP&E, property, plant, and equipment. And so this expense is capitalized. Now, let's make this a little bit more complex. Let's say that I'm a retail store now, and I have this lemonade stand in a retail store in a strip mall. And in order to do that, I need to rent out the space. So in order to rent out the space, I have to sign a lease contract with the landlord for the space for my lemonade stand. Well, I could actually have a lease as a liability on my balance sheet. And this is very common. You'll see this on a lot of financial statements of publicly traded companies. There's leases in the liability section of their balance sheet. So this is a very real expense that the company has to pay in order to have access, or what's called the right of use, for the asset of the space. And so we capitalize it, meaning that we assign some kind of value to it on the balance sheet. So there's that difference between capitalizing a cost for the business and expensing a cost for the business. And the way that I think about it is less than 12 months, we are going to expense it. Greater than 12 months, we're going to capitalize it. So that's the fundamental difference there, and just a way that you can think about how expenses are categorized. Okay, that's what I got for you today here on Investment Banking Insights. Thank you so much for joining me. My name is Alex, and I'll see you on the next one. Take care.